Welcome back to Explain the Charts, everyone. Today, July 29th, 2025, we're undertaking a crucial deep dive into the fascinating, yet recently turbulent, price action of Intel Corporation, ticker Intel. As we cast our gaze across the daily chart, which captures the stock's journey from March 2024 to the present day, a clear and rather pronounced long-term downtrend becomes immediately apparent, punctuated by periods of significant volatility. Intel has consistently traded well below its early 2024 highs, a period where it comfortably lingered around the $43 to $44 mark, signifying persistent selling pressure and a substantial erosion of its market capitalization over the past year. This consistent decline underscores deeper underlying fundamental concerns that have been weighing heavily on investor confidence, preventing any sustained upward momentum and reflecting market doubts about its strategic direction. The most striking feature on this extensive chart is undoubtedly the dramatic collapse experienced in late July 2025, a steep plunge that directly mirrors recent major corporate announcements and investor flight. Just a few days prior, Intel unveiled its second quarter 2025 financial results, which were notably characterized as mixed, largely failing to fully appease market expectations and instead raising new, more pressing questions about its path forward. Adding to the already building bearish sentiment, accompanying reports highlighted significant struggles within Intel's crucial foundry business, including plans to axe unprofitable projects and continued difficulties in securing new, large-scale customers, signaling deeper operational challenges ahead. Furthermore, the company confirmed it has largely completed aggressive headcount reductions, a part of its broader, ambitious strategy to hit a challenging $17 billion non-GAAP operating expense target for 2025, emphasizing the urgency of cost control. This unfortunate confluence of underwhelming earnings and concerning operational news triggered an immediate and severe market reaction, leading to a cascading effect that drove the stock into its current, much lower trading range with remarkable speed and conviction. To truly comprehend the sheer force and urgency of this recent sell-off, let's intensely pinpoint our focus on the 15-minute chart, specifically analyzing the critical period from July 24th, 1316 Universal Time Coordinated, extending through July 25th, 1946 Universal Time Coordinated. Here, the chart paints a vivid and concerning picture of rapid price depreciation. We see Intel, previously consolidating relatively calmly near $23.50, initiating a relentless cascade downwards. Each subsequent 15-minute candle in this specific range vividly reveals sustained, heavy selling, with the price slicing through multiple previously held intraday support levels, each break accompanied by noticeable and alarming surges in trading volume. This intense, concentrated selling, evidenced by the high volume during these sharp drops, validates that institutional and retail investors alike were quickly reevaluating their positions, leading to widespread liquidation and an influx of new, aggressive bearish short positions. The swiftness of this decline, where minimal recovery was seen within these 15-minute intervals, profoundly emphasizes the market's decisive and strongly negative interpretation of Intel's Q2 earnings and its forward guidance, leaving little room for doubt. It stands as a textbook illustration of how a combination of disappointing financial news and critical operational concerns can trigger an immediate and profound price readjustment in a high-profile stock. Shifting our attention to the 1-hour chart now, we gain a crucial midterm perspective on the immediate aftermath of that dramatic price collapse, observing how the market absorbed the shock. Following the initial steep descent witnessed on July 24th and 25th, Intel has visibly entered a phase of relative consolidation, its price action now largely confined within a relatively tighter range, broadly from $20.40 to $20.80, based on Monday's trading activity and the latest available data. Notably, the hourly trading volume during this consolidation period has significantly reduced, a stark contrast to the heavy, panic-driven selling volume observed during the peak of the crash itself, indicating easing pressure. This reduction in volatility and volume often signals that the immediate, intense, panic-driven selling pressure has begun to subside, suggesting a temporary equilibrium where neither determined buyers nor aggressive sellers are currently asserting dominant control. While this stabilization hints at a necessary pause in the immediate downtrend, it fundamentally does not necessarily confirm a sustained bullish reversal. Rather, it indicates a period of market indecision and anticipation, as traders and investors cautiously await new information or clearer technical breakout signals before committing. Let's revert to the daily chart to zoom out and pinpoint the most critical long-term technical levels that will definitively dictate INTC's future trajectory, whether upward or downward. The stock is currently sitting right on the cusp of a robust, historically significant support zone, stretching from approximately $19 to $20, a crucial test for the bulls. This particular price band has consistently acted as a strong technical floor in the past, notably providing a resilient rebound point in August 2024 and again attracting substantial buying interest during a brief dip in early 2025, making its integrity absolutely paramount. A decisive break below this $19 threshold, especially if accompanied by abnormally elevated volume, would be a profoundly bearish signal, likely opening the floodgates for a further precipitous decline towards its 52-week low of $17.66, potentially triggering widespread stop-loss cascades and exacerbating the downtrend. Looking to the upside, Intel faces immediate and formidable overhead resistance around the $22 to $23 price range. This area, once a reliable zone of support during previous periods, has now technically transformed into a very strong ceiling after the recent comprehensive breakdown. Beyond that immediate hurdle, a far more significant and psychologically important resistance level unequivocally resides at the $27 to $28 mark, which was the absolute apex of Intel's previous, albeit short-lived, recovery rally in February 2025. For Intel to embark on any genuinely sustained medium-term bullish reversal, it would absolutely need to convincingly reclaim and then hold firmly above this $27 to $28 ceiling, which appears to be a monumental and challenging task under current market and fundamental conditions. Given the persistent and well-established pattern of lower highs and lower lows from its original 2024 peak, the overarching long-term trend for Intel stock unequivocally remains firmly bearish, and traders should operate under this assumption until undeniable technical evidence suggests otherwise. Now, for the astute tactical trader, focusing on our 1-hour chart, the current period of consolidation distinctly offers several potential short-term trading opportunities based on a clear breakout strategy. A confirmed bullish breakout above the $20.80 short-term resistance, ideally accompanied by a noticeable and sustained increase in trading volume, could confidently signal the initiation of a potential relief rally, attracting short-term buyers. Such a rally might initially target the next minor resistance zones, first at $21.50 and then potentially extending towards the $22 level, offering viable short-term scalping opportunities for quick gains. Conversely, a decisive breakdown below the $20.40 immediate support, again, critically confirmed by heavier-than-average volume, would strongly reinforce the existing bearish sentiment and signal a continuation of the prevailing downtrend. This breakdown would very likely lead to an inevitable retest of the crucial $19 long-term support and potentially even lower levels if that support fails to hold, necessitating swift and disciplined risk management for any existing long positions. Traders should also pay extremely close attention to the formation of specific candlestick patterns around these key technical levels. For instance, a large bullish engulfing candle or a hammer pattern appearing precisely at or just above the $20 support could be a powerful reversal signal, especially if significant volume accompanies it. On the flip side, a bearish evening star or a shooting star formation emerging at $22 or $23 would strongly reinforce the overhead resistance and suggest further downside pressure, confirming a good short entry or a clear reason to exit any remaining long trades. Finally, constantly monitoring the volume-weighted average price, or VWP, on intraday charts can also provide dynamic support or resistance as trades unfold, offering highly precise entry and exit signals, particularly in volatile trading environments like this one. To synthesize our comprehensive analysis of Intel as of July 29, 2025, let's concisely recap the vital price levels and offer some unbiased probabilities for its future movements, both in the near and midterm. Intel's current trading position is undeniably precarious, resting directly on the critical long-term support zone of $19 to $20, a level that will serve as a crucial battleground for bulls and bears in the coming days. Immediate resistance levels that the stock must overcome include the short-term ceiling at $20.80, followed by more significant hurdles at $22 to $23 and the formidable, psychologically important $27 to $28 peak from earlier this year, which represents a major recovery target. Regarding a potential short-term rebound to the $22 to $23 range, we assign a moderate probability of approximately 65%, contingent on the absence of further severely negative news and perhaps a slight recovery in broader market sentiment or a surge in the semiconductor sector. However, the risk of a continued descent, potentially breaking decisively below the $19 support, is also very substantial, standing at a moderate to high probability of around 45 to 50%. Especially if Intel's operational and foundry challenges persist or if the broader macroeconomic environment deteriorates further. For a truly sustainable and robust long-term bullish reversal, implying a return to pre-crash levels and a new uptrend, the probability in the immediate short to medium term remains quite low, likely below 25%. As it would necessitate profound and sustained fundamental improvements, consistent product success, and tangible profitability in its critical foundry business. Beyond the technical patterns, astute traders should diligently monitor several upcoming fundamental factors, Intel's detailed product roadmap announcements, particularly regarding their next-generation chips and advancements in AI acceleration, which could serve as powerful catalysts for a shift in sentiment. Any major new contracts, strategic partnerships, or significant customer wins for the struggling foundry division would also be absolutely critical indicators of a potential, albeit challenging, turnaround and could provide a much-needed boost. Lastly, keep a close watch on analyst consensus changes and any major investment bank price target revisions, as these highly influential reports can exert considerable sway on market perception and subsequent price action, dictating short-term swings. Remember, the most effective trading strategy for Intel, especially in this volatile environment, will be to meticulously combine these crucial technical levels with a keen and continuous eye on the evolving fundamental news flow, allowing for agile decision-making.